95% of the retail people in the forex market lose money. This is what the broker statements are telling. Still, everybody use the same concepts: retail support and resistance, and they will use order blocks. This is all lies that are given to you. The real market algorithm is worked on the aspect of the time. The time and price is very, very important on the delivery of the price. So in this video we will deeply look into the time and price theory. So watch this video till the end, so you will get some very, very secret nuggets that you can't find anywhere else on the YouTube or in the Google. So what is time and price? Time and price is a fractal in nature. In all time, many people waste their time only focusing on price patterns, ignoring completely aspect of the x-axis. So if you see what this statement means, if you take a graph like this, and the price will move in this manner. To plot any point, you need two axes. One is price and another one is time. If you see the trading view, here you can find the time and here you can find the price. Many people will only look the high probable setups only based on the timing aspect. They don't look the high probable setups based on the time here. So this is what very, very important. If you combine both aspects, the price aspect and the time aspect, you can get very, very high probable trades. This is the main basis of the time and price theory. So when we dig deep into the time and price theory, have you ever wondered why ICT got the kill zone? I think everybody knows the ICT kill zones. ICT has divided the sessions into four type of sessions: Asian, London, NY session and PM session. Do you know why the ICT divided the sessions into four sessions? Because simply there is a thing called quarterly theory. Quarterly theory means every part is divided into four things. In a week we have 4 trading days. A Friday should be ignored, and in a day we have 4 sessions, and in a session we have 4 90-minute cycles, and in the single 90-minute cycles we have 4 microcycles. Everything is divided into the 4 parts. If you see the yearly candle, we have divided into 4 quarters. If we see the monthly candle, we have divided into the 4 quarters again. So everything is divided into the 4 parts. So this is the basic anatomy of the time theory. So if we combine the time and candle theory, you can exactly get this is how the candle will look like. Candle open. If this is a bullish candle, the candle will open here, and this is the low, and this is the high, and this is the close. So what is the candle theorem? The candle theorem is the anatomy of how the candle forms, even it's a 1 second candle or a 1 month candle or a yearly candle. Always the candle starts from the accumulation of the orders. It will accumulate some orders, and the low of the candle will form after the liquidity is taken out. After the liquidity is taken out, the low of the candle will form, and the same thing for the high of the candle, a liquidity should be taken out. So these are the only scenarios when the low and high of the candles will form. Other than these scenarios, nothing can form the candle. So if we can combine this candle formation with the quarterly theorem, we can exactly understand when the accumulation phase will occur and when the manipulation of the 95% of the traders will occur, and everything we can pinpoint together, and we can get the exact checklist how the algorithm will work. So if you see the Q1 means Asian session. Have you ever wondered ICT called it as Asian session for the liquidity buildup? It's because it's the quarter one. Quarter month means they should accumulate the orders. They should accumulate and give the retailers a reason to buy or sell the market and be in the wrong direction always. So that's why the retailers will buy here, and the manipulation phase means London session. London session is mostly all the times the manipulation phase. The London session will move into the opposite direction and take out all these masses orders, and then they will move in the real direction because they take all the liquidity before moving into the right direction. The market makers always take all the traders, because if everybody make the money, every retail people make the money, they will lose money. We should use the common sense, we should understand the market mechanics, basic market mechanics before trading. Basic market mechanics is if one person makes money, another person should lose money, right? So this is the basic thing. So why they will make work these type of patterns, smart money patterns, these type of shit don't work. These are all lies by the matrix. These are all complete lies to take the money from your brokerage account. That's why they will form these type of fake chart patterns, like accumulation in the orders. Q1 is all the accumulation. They will induce these type of false break of the structures and false like trend lines, etc., false support and resistance. Everything fake will be happened in the accumulation of the order, and the manipulation, a huge move will be taking all this liquidity, all the liquidity will be taken. So if you understand the basic mechanics of the market, you can know why they require the liquidity to move the price, because as like us, they can't execute the orders wherever they want in the marketplace. They can't execute their orders wherever they want in the marketplace. They need liquidity to move the prices, because if they let's say if they entered price here, let me draw with a clear example. So if the market is here, they can't enter here in this zone. They can't enter, because if they want to buy, there should be lot of sellers, right? There should be lot of sellers will be there, but the lot of sellers will not be there because they will buy in the billions of quantity. So to get the liquidity, they will search for the liquidity. So here the money will be there. Here the money will be there. So they will create fake orders at this level, fake limit orders at this level, and the price will sharply take this liquidity. Automatically billions of retail traders stop losses will hit. If they buy here, the retail people stop losses will be here, 1 to 2 pips below here. So if all the stop losses will trigger, means what? The opposite of the buy orders, the stop losses of the buy orders is sell orders. Automatically the market makers and the big banks got the liquidity for their buys, and they don't have to add any slippage, because if they entered the buy here, they will get lot of slippage. They don't want to get slippages. So that's why they have a lot of control over the marketplace, because the people who have largest money in the marketplace can control the market, because it's the basic thing. They have 90% of the money in their hands, so they can easily control the money and the markets, and they can easily control the chart patterns. It is what happening. It's a biggest lie. The chart don't work based on the supply and demand and everything. The chart is there to give you some bullshit reasons to put your money in the brokerage, and they will eat your money, and they are taking millions of salaries because of your retail people money. It's all big lies in this financial industry. In this video, I'll explain and tell you each and every lie. Watch the video till the end. These type of videos are very less in the YouTube, because the YouTube don't want to know you the truth. So here all the liquidity is taken out. After all the liquidity is taken out, the big boys will enter here. Market makers, big banks, everything, BlackRock, Vanguard, everything will enter here, and then they will take the trade. And again they will do the same thing. They will manipulate, induce, distribute. They will do the same cycle over and over again, because they know each and every retail strategy. They know each and every financial fundamental trading strategies, technical trading strategies, everything. They target whole strategies as a whole. They don't only target the support and resistance guys, and they don't only target the SMC guys, break of the structure guys. They target each and every strategy as a whole. Means they will target like this. For example, there is an indicator showing this. If it's giving 100% profits, they will lose money, right? If your strategy is giving 100% or 90% profits, they will lose money. So what they should do, they should control the market. In order to control the market, they created the algorithm. The name of the algorithm is Enigma. The role of the Enigma is to target each and every strategy and deliver the price, because they don't want everybody to make money in the marketplace. The market is theirs. We are just players in the marketplace. The 90% of the money in the market is controlled by the Vanguard and BlackRock. Like 20 trillion daily transactions are made by using them. Even on the 1 second time frame, the algorithm is trapping the people. If you see the chart in the 1 second time frame, you can see the market traps a lot of people. Same pattern. They will create these chart patterns, induce, and then they will go in the opposite direction. The same shit happening in any time frame. So the basic logic behind this all is, if 90% of the people are buying, the smart money sell. If 90% of the people are selling, the smart money buy, because they will hit the stop losses and they will take money. How they will get money from the marketplace? Once they hit the stop losses, they will get money, right? Without hitting the stop losses, they will not get money. So this is the basic understanding how the liquidity profile works in the marketplace. And to make work the liquidity profile, the algorithm works in the sequences of the time. If you break any time frame into the four parts, if you make the partition of the day into four parts like Asian session, London session, New York session, and PM session. So here Q1 means Asian session. What is the Asian session? Asian session is always build up of the liquidity. And what is the London session? London session is always manipulation of the liquidity. You can just enter here with 4 to 5 pip stop loss and ride the trend. Maximum of the days this shit happens. Same shit over and over and again. They will trap the traders, and if the 95% of the people are selling, here 95% people are selling, they will buy. Simple thing they will do. After the liquidity, they will enter the positions with very, very less slippages and take the money. So this is how they will induce the traders in the wrong direction, and they will do. We should use the common sense sometimes. This is what lacking in many of the people. I don't want to sound harsh to many people because this is the scenario happening. If a guy showing support and resistance works and post the pictures in the Lambo, everybody will follow that guy and think that support and resistance will work and they will make millions. They don't understand this basic thing. If everybody is making money in the marketplace, who is giving money? This is the sum zero game. If one people make money, others should lose. This is what should happen in the market. There's no money coming from the trees and everything. This is what should happen. And they have 95% of the money control of the marketplace. We retailer and small banks and everything, we don't have any control. Even the small banks and private banks and hedge funds, they also don't have any control. Only big banks and everything have control. So this is what happening. So if you understand this scenario, what's happening in every time frame, I can show you one thing. Here, let's say we are in a session. We are in the complete Asian session. Let's say this is Asian session. If we divide the Asian session again into the four parts, the cycle repeats. Again, the manipulation will occur. Again, the manipulation, sweep, distribution, reversal. So at any given time frame, this thing will occur. And also, if you at any session, if you divide these 90-minute cycles into again four parts, the same thing happens. Accumulation, sweep, distribution. The same cycle happens at everything. And if you can do this for each cycle, if you can do this again, because the time is fractal, the starting minutes of the Q1 you will get 1 second. Yeah, if you see here again, in the small thing you can find accumulation in the second time frame, sweep in the Q2, and distribution in the Q3. So this is how the price delivers, the enigma delivers. The time is fractal. The enigma delivers the price according to the time. If you see, I can show you numerous number of examples. Here if you see the day, this day, yesterday, if you can use the price, 4:30 means New York opening in my time zone, 4:30. 4:32, next day 4:30 you should count. Yeah, if you see, you can exactly see the Asian session, the Q1 means Asia session, right? This is the Asia session. What it looked like, it is a build up, clear build up. It is trapping the trend line traders. The trend line traders will sell here. They will think it is rejecting, two times rejecting, the market should sell, because they don't understand the basic scenario of the marketplace. If 99% of the people are using the support and resistance and supply and demand, where the liquidity will come from? Who will give them money? Just use common sense. The market does not work like that. If 95% of the people is buying, the smart money will sell. That's how only they will make money. And sometimes they will feed these type of small fishes in the marketplace who trade support and resistance and supply and demand. Sometimes only 5 times in 100 times, like that. Because if this concept don't work, they won't execute their trades and they won't come to the charts. And that's why to make them interested in these charts and think I should have used some strategy like that. They will make them think in the wrong direction, and they will try to get as much of money from the retail traders. The same thing brokers will do. Do you find it silly? The brokers will teach you the support and resistance and everything and act like they want you to be profitable. And if you know this fact, all the brokers will trade against you. If you bought a zero point 0.1 lot position, the broker will sell a zero point 0.1 lot position because they exactly know 99% of the people will lose money. These financial markets are the biggest scam in this entire ecosystem. If you see here, this is the Q1 manipulation, and if you see the Q2 fake break of the structure. After this fake break of the structure, many people will get trapped here. Smart money people will think they should buy, right? They will think they should buy, and here what liquidity got taken out? Everybody starts selling. They got buyers liquidity. Lot of buy positions will be here automatically because of the liquidity, because their stop losses will be here, and the breakout traders will enter here. Breakout traders liquidity also buy liquidity. So if the smart money want to sell, they can easily sell the market because they have all this money to execute their positions without slippages. Are you getting my point? They can execute all these positions without getting the slippages. So that's why they can execute all these positions without getting the slippages, and they can run the market like this. Simple thing. They can run the market. Huge downfall. Again here, if you can observe the Q3 how it was happened, let me explain 1 second. So this is the Q1, Q2, Q3, Q4, right? So if you use the same Fibonacci time sequences, quarterly theory, in the separate sessions itself, you can again find the Q1, Q2, Q3, etc. If you see, exactly the high was formed at the Q2. Q2 swept this liquidity and exactly reverse. So every time frame is fractal. The time is fractal. This quarterly theory works on the second time frame, everything. So you will blow your minds because I'm gonna show you this quarterly theory working in the, and this is the weekly time frame, and I'm gonna show you the quarterly theory that's working on the yearly time frame. The time frame is fractal, right? If you see on the 4 hour time frame or 4 years time frame, this quarterly theory works because the time is independent. So I'm using the fib. Always the quarterly theory works from the 2023. Like you can go backward from the 2023 or go forwards from the 2023. So it will be a good indication for you. So this is the 2023 to 2027, right? 4 years means 2027. So this is the quarterly theory. 1 second, guys. Yeah, so this is the quarterly theory, and if you see, we are currently in the which days? We are currently in the accumulation phase of the marketplace. We are just currently in the accumulation of the phase of the marketplace. So if you can go back and see what happened in the previous cycle, 2019, it starts from 2019 here, it starts here. Yeah, if you exactly see what's the Q1 acted like. Q1 made the fake break of the structure. Q1 made the fake break of the structure of the yearly time frame. This is the, we are looking at the yearly cycles, right? On the yearly, it made the fake break of the structure and a huge speed and aggression inducement, and the market followed the distributed the price. Same thing happens over and over and over and again. So I am showing you the previous cycle also. This starts from 2019, right? Yeah. Okay. So let's go back into the time. 2015, right? 2015. January. Okay. If you see again, this is the accumulation phase. The whole thing is the accumulation phase, and this is the liquidity, huge liquidity. And if you see when the low of the year formed, Q2, the low of the yearly cycle formed in this year 2016, the low of the yearly cycle formed because it took the liquidity grabs happened. in this Q2 only, and the Q3 exactly distributed the price. It distributed the price. Q4 is reversal or continuation. And if you can go still more depth, this is 2015, right? So if you go to the 2011, 2011 is where it was. Yeah, here. If you can observe here, the whole Q1 and Q2 is liquidity grab. If there is no liquidity grab, if there was no liquidity grab in the Q2, the Q3 will make the liquidity grab. This is the one of the very, very rare scenarios that will happen. Here in this scenario, you can't find any big manipulation phase in the Q2, right? So we should wait for the Q3. Here Q3, the big trend line manipulation happened and they formed the low of the yearly cycle. Same shit happens over and over and again, guys. 2011, so 2007, right? Again 2007, 2007. Yeah, here is the 2007. Can you see the in the Q2 manipulation phase again happened, the huge manipulation. Q2, this is Q1 accumulated orders, Q2 huge manipulation, and Q3 it made up. So if you observe the sequence, what is happening? Again, you can I can show you this 2003. Oh, I am showing you all the yearly cycles. January, one thing. Yeah, now fine. If you see here, again, in this scenario, there is no clear liquidity grab happened in the Q2 because there is no liquidity to taken out from the left, right? There is no liquidity from the left because the market is fresh. If the market is fresh, there is no liquidity from the left because there is no retail people acting as the liquidity here. So the market should make the liquidity in the Q2. The Q2 is itself acted as the liquidity here. Q2 acted as a liquidity, huge push, manipulation. Q3 formed the low of the year and then it reversed. Same thing, guys. Same thing happens over and over and again. The macroeconomic events will also follow quarterly theory. If you see, the Q2 aligns with the elections, US elections. So that's why these type of volume. And 2008, the crash. Have you wondered it exactly followed the Q2 means manipulation phase. So everything is connected. Every news media you see is all drama. It's all a big drama. Everything is connected. If you see all these news and the September 11 crashes, everything is following the news. Corona crash and everything, every major economic event is coming under this Q2 manipulation phases. If you still wonder these markets are not run by the algorithm and this world is not running by the algorithm, it means you are just vanished and brainwashed by this matrix. It's completely coded, and this is all hidden agenda we can't see through our eyes. Just in this video, I showed how the macroeconomic events are following a sequence, and there is a famous book called The Fourth Cycle, which has written by some great author. You can read the book. He also explained this cycles forms in the type of four. Every 4 years, some major economic events will occur, like Corona crash, September 11 crash, everything. 2008. If you see the sequence, you can exactly find because 2008 the crash happened. On the 2016 a crash happened on the GBP. Again on the 2020 the crash happened. These crashes are predetermined by the elites in the world because they will induce all the people and then they will take all the money, not in the aspect of the trading itself, but they will in the real life also they will create these type of patterns to control the world. So this video is just about the quarterly theory. So I think you found some good value because of this video. So if you want to join my private mentorship where I discuss deeply and about the market mechanics. I don't explain any strategy or anything. I will just explain how the market moves. Like if the anybody, I don't see anybody explaining this shit. How the market moves, how the basic market moves. If the news came positive, why the market is not moving up? It goes down and take the liquidity and then it's going up. Nobody explains this shit. They will just tell liquidity. 99% of the traders don't understand the liquidity. So if you want to join my mentorship and learn deep mechanics of the marketplace, you can join, because if you don't understand the deep mechanics of the marketplace, you can't become a real trader, because you can't sit in the house and earn consistent income from the marketplace if you don't understand this all type of shits which the hedge fund owners and everybody knows. But we as retail traders don't have that knowledge. If you want to access that type of esoteric knowledge about these markets, how the real fundamental of the market works, join my mentorship, which is $222. Link in the description. You can join through them. Peace, guys. Hope you liked the video.
My course. This is the Discord group you are added to, and all the discussion will be here. And this is the free chart where I post every trade I took and the data collection I took, everything. And there is some section for this separate mindset, and I will recommend some books. Everything is going here, and this is about the trading psychology. Because at the end of the day, the psychology is the only thing that separates the profitable traders and unprofitable traders. And this is the VIP section. So this is the section where you video mentorship tab, where you will get it after joining my course. This is where you will get access to all the completed boot camps. So you can get a bonus which you will receive after joining my course. And this is the 5-step mental program that enables to control your emotions while trading. And this is the morning routine, everything. And I give some trading affirmations where our students will chant all this information before the trading time. And these are the data collection of our age. And this is the January data collection. We are up like 2% in just 1 month, and these are all the data collections in October. 19%. I will give all the access to my students, all these data collections like wins and losses, everything. And this is September month, so you will get the data collection of edge exactly, so that you can exactly know where to take the trades and everything, because nobody, no mentor will teach you the edge and show the losses. This is honest mentorship. If you wanna join and change your life, this is the best opportunity, and take